some of these property investment gurus, influencers are in some serious trouble and they're facing bankruptcy. Social media famous property investors, I guess, giving all this questionable advice about how to invest in properties. Once you have your money invested into real estate, you have to understand your strategy for managing whatever property you've invested in. Real estate is not passive. You have to have clear and specific goals about what you want to achieve with your real estate. So I came up with top 5 rookie mistakes that a new real estate investor might experience on their journey. Some of you maybe come across my content because you're looking to invest in real estate. And real estate investment is a wise investment. However, like any investment, you have to do your due diligence and you have to understand what you're getting yourself into. It's not as simple as some of these real estate gurus on TikTok and Instagram make it seem. So I came up with a top 5 of some of the things that we like to speak to our either rookie investors or even some of our investors who just kind of need a brush up on what to look for. So the 5th on our list would be market research and location. And it's super important to understand the market you are investing in. Get information and understand the market dynamics of that neighborhood to really get an understanding of where the rental numbers are at, what the demographics are like, what type of projections we see in terms of value going forward, where the major infrastructure investments are in those areas, cities or neighborhoods, where the schools are, where the new employment may be, if there's major employers that are shutting down that could impact your rental numbers or your resale numbers in the future. You want to work with local experts who have that market research already completed because they work in those neighborhoods. They work, live, play in those neighborhoods. They have a much better understanding of those places. So number 4 on our list is financial preparedness. So having your money ready, having your credit checked, having all of these things in place prior to you really going out and exploring if real estate investment is for you. Having a good credit score is key to being able to get a loan. Unless if you're coming in cash rich and you have the money to splash down in cash, most, especially newbie rookie investors, are coming in and are likely going to take a loan. And I mean, even if you do have a lot of money, leverage that money. Don't put it all in one spot. So for leverage to take a loan, you have to have good credit. Go get a pre-approval. Talk to a financial advisor. See where your credit's at right now. If you have bad credit right now, that's also not terrible. Financial planners, some even mortgage brokers will give you steps to help you improve your credit so that perhaps even if you have the cash right now, you can take steps over the next 3, 6, 12 months to improve that credit, to get that loan, to hopefully put you in a position where you can now take out a mortgage and get started on your investment journey. You also have to be wary of the tax man, right? So depending on what type of investments you are doing in real estate, if you have to look at things like capital gains, will the government view the proceeds of your investment as income versus capital gains? So that now leads us to step number 3, your investment strategy. Once you have your money invested into real estate, you have to understand your strategy for managing whatever property you've invested in. Real estate is not passive. It is the opposite of a passive investment. It's very much an active investment. So you have to have a strategy. Are you going to leverage technology to manage your real estate? Are you going to reach out to property management firms to manage that real estate? Do you have a retired family member who could help you with managing the real estate? In my opinion, where we're headed with technology, there's a lot of different pieces of technology now that will do a lot of the management, especially when it comes to bookkeeping, collecting rent, doing tenant screening. All of that kind of stuff can now be done with technology. So it'd be very important to do your research and figure out what type of strategy you're going to employ to manage that investment, because last thing you want is for that money that you sunk into something to be lost because you haven't strategized that investment. So number 2 on our list kind of ties in a little bit to number 4, understanding your financing options. So once you've decided to purchase a property, how are you going to pay for it? There's a lot of interesting ways that you can invest in real estate that aren't necessarily buying a property, putting a mortgage on it, and collecting rent. There are other ways to invest into real estate. There's crowdfunding like partnerships. It's important to seek out information from professionals, people in your network, your bank, your financial advisors, mortgage brokers. That give you all of the different options available to get your money invested into real estate. Not everyone's situation is exactly the same. So number 1 on our list is risk management. This is the number 1 thing that both rookie property investors and some veteran property investors need to be aware of when they're looking to purchase real estate as an investment. You have to have clear and specific goals about what you want to achieve with your real estate investment. Is it a short-term buy, renovate, and flip? Are you looking specifically at gaining rental income? Is it a long-term purchase where you're just looking at the eventual return on your investment? Where you're not necessarily looking at your month-to-month rental income, you're just looking at property appreciation year over year. You have to understand your goals going into the purchase so you can manage the risk. Obviously, the shorter term, in my experience, and most people will likely agree, is that the shorter term goals are generally some of the riskier investments in real estate. So property flipping on HGTV and social media can seem very attractive. You can make a lot of money in a short period of time. It is, in my opinion, the riskiest form of property and real estate investment. You're putting in a lot of money and you're hoping to recoup your investment in a short period of time. So make sure you're managing risk when you're going in, understanding all the different forms of real estate investment, speaking to professionals, speaking to realtors, mortgage brokers, financial planners, and getting understanding of the different risk factors and the different types of real estate investments. So then ultimately setting your goal is the key to unlocking the real estate market. All right, so that's it for our show today. Thanks for watching. So if you're looking to buy, sell, or even rent in some of those under the radar neighborhoods or anywhere in the city of Toronto, we would be more than happy to be your real estate resource for any of that. Don't forget to like and subscribe if you like this podcast or if you like any of our content. It really helps us out. So remember, in real estate as in life, the next big thing might just be where you least expect it. Peace out.